Okay, so you want to own an indoor skydiving center. You experience one as a customer. You enter a massive wind tunnel. The fan accelerates to simulate freefall. You're floating in midair. It's thrilling. It's unforgettable. Groups are booking constantly. Birthday parties, corporate events, team building, thrill seekers from all over. A single flight session costs $60 to $100 per person. A session involves 8 to 15 people. One session generates $480 to $1,500 in revenue. A facility can run 8 to 12 sessions per day. That's $3,840 to $18,000 in daily revenue. A facility operating 7 days per week generates $26,880 to $126,000 per week. That's $1.4 million to $6.5 million in annual revenue. The margins look phenomenal. You're renting air and electricity. The experience is incredible. Customers rave about it. They buy merchandise. They book photos and video packages. It sounds like owning an entertainment asset that prints money while creating unforgettable experiences. It sounds like owning an indoor skydiving center in 2010 when the concept was brand new, when locations were scarce, when every facility had wait lists, and when anyone with capital and a massive building could build an extraordinary business. That is exactly the comparison people are making right now. The indoor skydiving industry generates over $1 billion annually globally. There are over 500 commercial indoor skydiving centers worldwide. The experience is thrilling. The customer satisfaction is high. Repeat business is common. Corporate events pay premium prices. It seems like a perfect business. But here's what is actually happening on the ground, inside indoor skydiving facilities when the cameras are off and the actual financial statements are open. The reality of owning an indoor skydiving center is completely different from what the high-volume sessions suggest. Some centers are making money. Many are barely breaking even. And a significant number are losing money every month while servicing debt on a $2 million to $8 million capital investment. The gap between the few that thrive and the vast majority that fail comes down to a handful of things that almost nobody explains before you spend millions on a building, a wind tunnel, and operational infrastructure. By the end of this, you will know exactly where the money comes from, where it disappears to, what the hidden costs really are, and what separates the indoor skydiving centers that generate returns from the ones that became expensive monuments to entertainment that consumed capital relentlessly. What an indoor skydiving center actually sells. The experience trap people assume that owning an indoor skydiving center means you're selling thrilling skydiving experiences. You are. But that's not where the profit comes from. If you're selling flight time at standard pricing, the margins are much thinner than the per session revenue suggests. What an indoor skydiving center actually sells is memory creation, social validation, and the story people will tell afterward. The customer is paying for the experience they'll photograph, post on social media, and discuss for months. They're paying for the moment with friends or family where something special happened. But here's the brutal truth. This experience is consumable. You buy it once and it's over. The customer might return in 2 to 3 years. Most don't. They brag about the experience for a few weeks and then move on. Repeat customers are 10% to 20% of revenue at most. You're dependent on new customer acquisition. New customers require marketing. Marketing costs money. Marketing is where the margins disappear. But here's where the economics turn against operators. An indoor skydiving center has an enormous fixed cost structure. The wind tunnel costs $500,000 to $2 million depending on power and sophistication. The building is $300,000 to $1 million annually in rent or mortgage. Staff is $200,000 to $500,000 annually. Insurance is $50,000 to $150,000 annually. Utilities are $40,000 to $100,000 annually. These costs don't decrease if you have a slow month. They're constant. When you're dependent on new customer acquisition with high marketing costs, and your fixed costs are massive, the profitability becomes extremely difficult to achieve. The full upfront investment, what actually costs money. Everyone talks about the wind tunnel. Nobody talks about everything else that consumes capital before the first customer flies. Real estate and facility, $500,000 to $2 million. An indoor skydiving center needs massive space. 10,000 to 20,000 square feet minimum. The ceiling must be 40 to 60 feet high. The wind tunnel requires specialized construction. Most facilities lease their space. Commercial rent for industrial buildings is $1 to $5 per square foot annually. A 15,000 square foot space at $2 per square foot is $30,000 annually or $2,500 per month. Alternatively, buying the facility requires $500,000 to $2 million depending on market and condition. Most operators lease rather than buy. Wind tunnel equipment, $500,000 to $2 million. This is the largest capital expenditure. A commercial wind tunnel is custom engineered. Power requirements are substantial. A mid-range wind tunnel suitable for skydiving experiences costs $800,000 to $1.5 million. Installation and electrical upgrades add $200,000 to $500,000. Total equipment cost, $1 million to $2 million. Building construction and modifications, $200,000 to $800,000. Reinforcing the building to support the wind tunnel. Electrical infrastructure for 300 plus kilowatts of power. HVAC systems. Sound dampening. Safety barriers. Spectator areas. Bathrooms. Reception area. Professional build-out, $200,000 to $800,000. Safety equipment and compliance, $50,000 to $150,000. Skydiving suits for customers. Helmets. Goggles. Safety gear. Medical emergency equipment. Fire suppression systems. Building codes compliance. Certification and permits. Cost, $50,000 to $150,000. Insurance and licensing, $100,000 to $300,000. Initially, liability insurance is expensive for a high-risk entertainment venue. Coverage for injuries, property damage, and operations. Annual renewal is $50,000 to $150,000. Initial setup, $100,000 to $300,000. Software and operations, $30,000 to $100,000. Waiver system. Reservation software. Payment processing. Customer management. Video recording and editing system. Photo management. Time tracking. Cost, $30,000 to $100,000. Marketing and grand opening, $100,000 to $300,000. A new skydiving center needs massive awareness. Grand opening events. Digital advertising. Influencer partnerships. Local PR. Paid advertising across channels. Building initial customer base requires aggressive marketing. Cost, $100,000 to $300,000. Staff training and initial operations, $100,000 to $300,000. Instructors need specialized training. Safety training. Customer service training. Initial payroll during ramp-up. Cost, $100,000 to $300,000. Working capital and operating reserve, $200,000 to $500,000. Reserve capital for operating expenses during first 12 months while building customer base. Equipment maintenance reserves. Contingencies for equipment failure or repairs. The real total investment. For a legitimate indoor skydiving center, the total upfront investment is $2.5 million to $7 million depending on facility size, location, and equipment quality. Most operators finance 60% to 75% through real estate loans and equipment financing. A $5 million investment at 6% interest over 15 years is $47,000 per month in debt service, or $564,000 per year. Where the money actually goes, the operating cost reality. Once you're open, the costs are relentless. And this is where the indoor skydiving business reveals why margins collapse. Rent/facility costs, 15% to 30% of revenue, typically 20%. A 15,000 square foot space at $2,500 per month. If your facility generates $200,000 per month in revenue, rent is 1.25%. If it generates $100,000, rent is 2.5%. If it generates $50,000, rent is 5%. But utilization is rarely consistent. Average utilization is 40% to 60%, not optimistic 80% plus. Realistic rent burden is 15% to 30% of revenue. Wind tunnel operating costs, 25% to 40% of revenue. The wind tunnel's primary cost is electricity. Operating a 300 plus kilowatt tunnel continuously costs $5,000 to $12,000 per month depending on local electricity rates. At $60 to $100 per person and typical 10-person sessions, electricity cost per customer is $50 to $120. Add maintenance, $2,000 to $5,000 monthly, and you're at 25% to 40% of revenue just in wind tunnel costs. Labor, 20% to 35% of revenue. Instructors cost $40,000 to $70,000 per year. Customer service/staff, $25,000 to $45,000. Management, $50,000 to $80,000. A facility with 10 to 15 full-time staff costs $400,000 to $700,000 annually. On $1 million revenue, that's 40% to 70% of revenue. On $2 million revenue, it's 20% to 35%. Insurance, 5% to 10% of revenue. Annual insurance of $100,000 to $150,000. On $1 million revenue, that's 10% to 15%. On $2 million revenue, it's 5% to 7.5%. Marketing and customer acquisition, 10% to 20% of revenue. You can't rely on walk-in traffic. You need constant advertising. Google Ads, Facebook, Instagram, corporate partnership outreach. CAC, customer acquisition cost, is $20 to $60 per customer depending on channel and market saturation. Equipment maintenance and repairs, 5% to 10% of revenue. Wind tunnels require constant maintenance. Parts wear out. Fans degrade. Seals need replacement. Annual maintenance costs $50,000 to $150,000 depending on facility age and equipment condition. Utilities, beyond wind tunnel, $2,000 to $5,000 per month. Electricity for facilities. Water. Sewer. Internet. Heating and cooling for non-tunnel areas. Professional services and compliance, $1,000 to $2,500 per month. Accounting. Legal. Regulatory compliance. Safety audits. The monthly revenue and cost reality for a typical center, an indoor skydiving center with realistic 50% utilization, sessions per day, 6 sessions average, capacity would be 10 plus, people per session, 8 people operating days, 6 days per week, 26 days per month. Monthly customers. 6 sessions times 8 people times 26 days equals 1,248 people. Average price per person, $75 base revenue. 1,248 times $75 equals $93,600 additional revenue. Photos, merchandise, packages $15,000 total monthly revenue, $108,600. Now the costs. Rent $2,500/month, $2,500. Wind tunnel electricity $8,000/month, $8,000. Wind tunnel maintenance $4,000/month, $4,000. Staff labor, 30%, $32,580. Insurance, $8,000/month, $8,000. Marketing, 12%, $13,032. Equipment maintenance, 6%, $6,516. Utilities, $3,500. Professional services, $1,500. Credit card processing, 3%, $3,258. Miscellaneous/contingency, 5%, $5,430. Total operating costs, $88,316. Net operating profit, $20,284. Annual operating profit, $243,408 less. Debt service, $47,000 per month, $564,000. Annual net loss, $320,592. This indoor skydiving center generating $1.3 million in annual revenue is losing $320,000 annually. The model isn't profitable. What indoor skydiving owners don't account for: the utilization trap. The math above assumes 50% utilization and consistent pricing. Here's what actually happens. Severe seasonal volatility. Summer is peak season. School kids are out. Families vacation. Birthday parties book heavily. You might run at 70% to 80% utilization. Winter is slow. Weather affects traffic. January is dead. You might run at 25% to 35% utilization. Fixed costs don't decrease in winter. You're losing money 4 to 5 months per year. Groupon and discount. Pressure to fill capacity during slow periods. You discount heavily on Groupon or offer group packages. A $75 flight becomes $40 through Groupon. Revenue per customer drops 45%. Groupon customers are often one-time only. You're trading high-margin revenue for low-margin volume. Maintenance emergencies. A bearing in the wind tunnel fails. Replacement and installation, $50,000 to $100,000. The facility is down for 2 to 4 weeks. You lose revenue. You still pay fixed costs and debt service. A single major failure can cost $100,000 to $150,000 in lost revenue plus repair costs. Competitive entry. A second skydiving center opens nearby. Prices drop from $75 to $50 to compete. Your revenue per customer falls 33%. You need 50% more customers just to maintain revenue. This requires more marketing spending, which compresses margins further. Customer satisfaction issues. A customer gets injured. Negative reviews spread. Bookings drop 20% to 30%. You have to increase marketing spending to rebuild traffic. Operating losses accelerate. The indoor skydiving center that actually works. You locate in a major tourist market: Las Vegas, Orlando, New York, Cancun. Tourism drives consistent demand year-round. Tourists have higher budgets. They book at peak prices. Your facility achieves 70% to 80% utilization continuously. You generate $220,000 to $250,000 in monthly revenue. Operating costs remain $85,000 to $100,000. Monthly profit, $120,000 to $165,000. Annual profit, $1.44 million to $1.98 million. Now the business works if you finance conservatively. At $2.5 million investment, you're achieving 60% to 80% annual returns. Alternatively, you own multiple locations and share management overhead. One regional manager oversees 3 locations. Marketing is centralized. Purchasing power increases. Per location profitability improves significantly. The bad scenario. The more common outcome: you open an indoor skydiving center in a secondary market with $4 million invested. Year 1 utilization is 55%, and you generate $1.3 million in revenue. Operating costs are $1 million. Operating profit, $300,000. Debt service is $564,000. You lose $264,000 year 1. Year 2, a competitor opens nearby. Utilization drops to 40%. Revenue is $950,000. Operating costs remain $900,000, many are fixed. Operating profit, $50,000. You're losing $514,000 after debt service. Year 3 utilization is 30%. Revenue is $630,000. You're losing $670,000 annually. You're underwater. By year 4, you're forced to close or sell at a massive loss. Total accumulated losses, $1.5 million to $2 million. You've lost your entire investment and more. The hidden cost nobody discusses: personal injury liability. An instructor makes a mistake. A customer hits the wall of the tunnel. Broken arm. An older customer has a heart attack. Spinal injury. These happen. Insurance covers some exposure but not all. Large judgments can exceed insurance limits. You're personally liable. A $1 million judgment is possible. This is the ticking time bomb in the skydiving business. The industry maturity. Why early movers had advantages. The indoor skydiving industry grew rapidly from 2010 to 2016. Locations were scarce. Novelty was high. First movers captured local markets and generated excellent returns. By 2018 to 2022, most major markets had 2 to 5 facilities. Competition intensified. By 2024, the industry is mature. Many locations are unprofitable. Consolidation is happening. Operators are exiting. The easy money has been made. Conclusion: the actual economics of indoor skydiving center ownership. Owning an indoor skydiving center is a capital-intensive entertainment business with massive fixed costs, severe seasonal volatility, and structural vulnerability to competitive saturation. Most centers are unprofitable except in tourist-dependent locations or with multiple locations sharing overhead. The money in indoor skydiving went primarily to first movers in 2010 to 2015 who benefited from novelty and scarcity. The industry is now mature and in many markets declining. Most single-location operators are unprofitable. Operators are consolidating or closing. The separation between centers that survive and those that fail comes down to three factors: location selection in high-traffic, tourist-dependent markets, multi-location operations that spread overhead, first-mover advantage before competitive saturation. A single indoor skydiving center in a secondary market with 3 or more competitors will almost certainly be unprofitable. The pricing pressure from competition combined with massive fixed costs that don't scale with revenue create a profitability ceiling. Without first-mover advantage or market uniqueness, the business model struggles. Here's the brutal reality that operators won't discuss publicly. The fun factor is real. The customer experience is genuinely thrilling. But the business model is broken for most locations. Capital invested in 2020 or later in non-tourist markets is likely to generate negative returns. The indoor skydiving center that seemed like a fun way to build wealth is actually a capital-intensive entertainment business with declining fundamentals and competitive intensity that makes profitability increasingly elusive. If you're considering opening an indoor skydiving center, understand that you're betting against geographic advantage and market saturation. Without exceptional competitive positioning or location advantage, you're likely to spend $3 million to $5 million and generate losses for years until you exit at a fraction of your investment.